Greetings, everyone. This is Eric, founder and CEO of Cubicle Investing. Visit my website at cubicleinvesting.com, and there you can download my free ebook, which you see here over the right side of my shoulder. You can just submit your name and your email address, and also, if you download the ebook, you will be put into my email distribution list, where you will start receiving my weekly newsletter, my weekly financial and investing newsletter that comes out every week, every Monday at 10 a.m. Eastern Standard Time. So today I want to talk about what took place in the market this past week. Today is February the 26th. What took place in the market as a result of Russia actually announcing, I think it was early Thursday before the market opened, announcing that they were going to, commence a military operation in the Ukraine. All right, so we're back. Let me move myself out of the way here. So I actually head up the Tastyworks trading platform, but I think Thinkorswim will do a lot better conveying what I want to speak about in this particular video. So what I want to talk about is, the ability to make money during uncertain times, or when there's war or turmoil that's taking place, in the country, also throughout the world, and how you can leverage this, right, to make money. And what a lot of retail investors don't understand is that the market does really well. It fares really well during times of turmoil, right? Wars, conflicts, etc. And so what often will happen is that a lot of folks will see, the market dipping rather dramatically as a result of some turmoil that's going on in the country or throughout the world, and they will start to sell or move out of their equity positions because of fear. And that's the exact opposite of what you want to do, right? Because again, when there's war, when there's conflicts, unfortunately, you can make money in those uncertain times, particularly in the stock market itself, right? Because let me think about it. You don't experience any personal growth in your comfort zone, right? All personal growth takes place outside of your comfort zone. And so you have to get comfortable with being uncomfortable. And so as an investor and also slash trader, you have to be comfortable with the volatility that occurs in the market and understand that it's a money making opportunity, right? And so what we saw, basically what happened was when Russia announced early Thursday morning prior to the market opening that they were going to commence a military operation in Ukraine. Well, of course, during the futures market, right? Because the futures market actually opens before the actual stock market opens, right? And so the futures market dipped, and so what the ES mini, which is the futures contract for the S&P 500, I was actually observing the price action before the market opened, and so it told me it basically stated that the market was going to open down, and it did. So we can see here that the market opened. Pull out my pointer here. All right, so we can see here that the market opened down. It was here eventually on Wednesday. It closed at let's see, roughly it closed at roughly 42.26, and it dropped down. So when the market opened, it dropped to 41.14 and some change, right? So you can see that here in this bubble, right? But here's the thing. So because this this unknown has been hovering over the market, this unknown meaning that before Russia actually commenced this military operation, it was just this talk back and forth about whether or not Russia was going to invade Ukraine. And so the market does not like uncertainty. So because the market was not sure what was going to happen once the conflict took place, once Russia actually started this military operation into Ukraine, well, then, these large institutions could actually begin to, analyze the situation and decide how they were going to redeploy money, right? So in other words, okay, so the unknown is now known, and so how are we going to go forward and start investing this money? Because institutional investors do not have the luxury of sitting on the sideline like us retail investors do, because they have to perform, so they are obligated to invest their clients' money, and their performance is scrutinized every quarter, right? So they have to perform. They have to, always be seeking a positive return on the assets that they have under management, right? And so what we saw was the market early on, it dropped, and then eventually throughout the day, throughout Thursday, this past Thursday, we can see here that the market, as a result of the unknown now being known, that the market shot up, and so eventually on Friday, again, so on Thursday when the market opened, it opened at 41.14.65. And when the market closed this past Friday, it closed at 43.84.65. So just in those 2 days, it increased a little over 6.5%, right? Because again, the unknown became known now. And so I had a couple of folks who I actually mentor in the trading and the options trading space, called me up and said, Eric, what should we do? And I said, well, you shouldn't do anything if you are investing long term. As a matter of fact, you should actually be looking to increase your positions on those good quality companies that you're already in, like AMD, Microsoft, Apple, potentially XLK, which is the ETF, XLY, SMH, which is a ETF for the semiconductors. So you don't want to sell at this particular point when the market is falling, because we know from history that the market does well during times of turmoil, right? And so again, there is money to be made when there's blood in the streets, if you will. I hate to use that analogy, but it's absolutely true. I mean, Warren Buffett has always said this, that be fearful when the market is greedy, and be greedy when others are fearful, right? And so this is a time where when folks are fearful, you need to comport yourself in a way that allows you to have the proper frame of reference in order to leverage this conflict to your financial benefit. All right, so again, keeping with the theme of this video, making money in times of fear, turmoil, conflict. So I want to bring up two incidents that happened in this country, actually. So the first one, and just to demonstrate that the market does fairly well, it fares well during times of conflict, turmoil, and also, and actually war, but I'm not going to actually highlight any war situations here, but I could go back to World War I to show you how the market responded negatively to World War I, and then shortly thereafter, the market went on to rally, so again, so want to look at what took place on September the 11th, 2001. So actually the day prior to September the 11th, the market was at 1096.94, right? And so when the World Trade Center buildings were hit, actually that occurred before the market opened. So the market never opened on that Tuesday, right? It was closed that entire week, right? And so it didn't open again until September the 17th, which was a Monday. And so, you can guess what happened. The market immediately start to dip, right? So this here is the price action of the market on Monday, Tuesday, Wednesday, Thursday, and the market bottomed out on Friday at 944.75, right? So from this point 1096.94 to 944.75. The market dropped more than 13%, right, in just that 1 week. However, over the next 3 months or so, the market rallied 22.9% to end the year, to end 2001 at a high of 1161 and 16 cents, right? Or 1161 and some change. So again, had you panicked and got out of the market as the market was falling, you would have definitely missed this 22% rally. And again, the market fares well during times of uncertainty and also during times of conflict, right? Because the market, it goes up more than it actually goes down. And so these large institutions have no choice but to redeploy their assets under management because, again, they're on the hook to perform. And so, yeah, you're going to see folks who are going to sell first and ask questions later. But nevertheless, once things settle, folks redeploy that money back into the market. And what you'll see again, if you're patient, right, is the market will rally, it will recover, and it will go on to experience new highs. So that was what happened during September the 11th, right? So if we look at the next situation, which happened, more recently, was the quote-unquote pandemic, right? So when COVID-19 was declared a pandemic in March of 2021, the market dropped from 31.30 and 20 on March the 4th of 2021 down to 21.91.86 on March the 23rd. That's when it bottomed out, right? So the market dropped 30%. As a matter of fact, that was the largest and quickest drop that the market had ever experienced in the history of the market itself, right? So a 30% drop and in a few weeks, is historical, right? Never happened before. However, again, if you had the proper frame of reference, and if you were able to maintain your composure and stomach the volatility, the market has basically over the next year, 1 year time frame, the market rallied 78.22%, right? So it ended the year, well, it didn't end the year, but roughly a year from March 23rd, the market finished at 39.06.41, right? So again, if you have the proper frame of reference, right? If you don't panic, and if you recognize the opportunity that these conflicts present to you, you can make a lot of money, in the stock market itself. Again, just taking advantage of the fear that arises from conflicts that are inevitable, it seems, in this country and also throughout the world. Now you might, some folks who are pretty who are well versed with stock market history, they may argue that, well, what about what took place during the financial crisis back in 07, 08? Because it really, it didn't, so the market did not recover as quickly as those last two conflicts or those last two situations that I just spoke about. It actually, so when the financial crisis took place, and I'm not going to get into the details of what took place during 07 or 08, but nevertheless, when the financial crisis hit, the market on October the 11th of 07 was at roughly around 1564.55, and it dropped, and it did not actually reach that point again until 5.5 years later. So now, if you were in your 50s or 60s and you were looking to potentially retire, or you were on the verge of retiring, I should say, and if you were in the market during this period, yeah, you got screwed. You know, you definitely got screwed. But nevertheless, for those folks who, have a long-term investment horizon, and also if you're a trader, this 5.5 year, point where it took the market to actually rebound and recover, it would not have been an issue for you, again, because in the long term the market always, it always bounces back and goes on to make a new high. But nevertheless, it did take 5 years, 5.5 years, for the market to recover from the financial crisis of 07, 08. And as a result, the Federal Reserve has actually taken on a different responsibility, if you will, as it relates to the market. And so, as a result now of what took place during this financial crisis, the Federal Reserve has become much more involved with how the stock market performs. All right, so the last thing I want to speak about before I wrap this video up is just showing you a swing trade that I'm in right now on SQ. It used to be called Square, but now the company is called Block. So a few days ago, this trade was actually underwater, right? But as you can see, as a result of two things that recently took place, again, the fact that the Ukraine-Russia conflict went from an unknown now to a known has taken place, so the market, can actually reevaluate, how to adjust to this conflict taking place in Ukraine. And also the fact that SQ or Block just recently had a positive earnings report, right? So their earnings report actually exceeded the market's expectations, and as a result, the price of SQ or Block has increased a little over 24 points. So the credit that I took in for putting on this position is $17,276, right? Thus far, I have received an unrealized profit, and I say unrealized because I have not closed out the trade yet, so it's unrealized. It's unrealized profit of 49.5% of this 17,276, which is $8,555 I have made thus far on just this one trading position. It's a swing trade. And again, this is during a time of fear in the market, right? So again, as an investor, as a long-term investor, fear should not be an issue for you. But as an options trader, fear should be a situation where you see it as an opportunity to make money, right? Fear in the market presents you opportunities to make money because of the high volatility that arises in the market, right? So that's just that one position. But nevertheless, you can see here on the marathon position, I'm actually down 28.67. So it's an unrealized loss right now. Again, it's unrealized because I haven't closed the trade out yet. I'm going to be in this trade for at least the next 4 to 5 months. So I definitely expect marathon to increase above the price point of $40 per share, come December, come the end of this year. So I'm not concerned about that position. But nevertheless, if you guys are interested in learning how to trade options, again, go to my website, cubicleinvesting.com, download my free ebook, or you can actually buy the $25 ebook that will actually give you access to links to videos that actually demonstrate how to put on various option strategies to make money weekly or bi-weekly or even monthly, selling options.